And welcome to the Market Alert for Wednesday, the 27th of July 2016. And starting off with yesterday's trading session, this is a live chart. I just wanted to show you how I achieved the profits from yesterday's trade when the market moved lower. But first thing, we had the market moving higher first, a 20-point scalp there, managing just to pick up a few points out of that before the market then waited for the consumer news out at 3 p.m. So the consumer confidence figures coming out at 97.3, forecast at 95.6, previous was 97.4, so not an awful lot of increase, in fact a decrease when you look at the previous of 0.1 there. So the market then reacts to this, and you see we get a sell signal as I fast forward through here. The order is filled, the market then trades down to the scalp, which you'll see in just a moment. And as it drives through, this is the important thing, you see the market actually driving through the scalp. It doesn't just hit it, it starts to actually drive through, and that's the cue to say that you can actually hold a position. Also, we've got the next downside target as well, which is the blue psychological line, which we'll see in just a moment. So as the market moves lower, you can see there that we've got the 18, it'll be the 18,450 level for the blue line, and you'll see the market then drive through that as well. So at this point, what I've done, you'll see I'm removing the scalp, moving the stop to break, sorry, not the scalp, the initial stop, moving the stop to break even, and then leaving the market to show me what it's going to do. So I'm letting it breathe. The market then takes out the 18,400 level, and you'll see now that I'm watching the market come back. I've also put a stop in at this lower high here, so you'll see that actually happen, and I've removed the scalp figure now, and then prices trade sideways. And I've put we've got a potential buy signal, so I can keep the 50% in from the entry price instead of having to draw a new one in with the actual markup tool. You'll see me just remove those, so I'll leave that there just in case the market reverses. And if the market had filled that, I could have actually just redrawn that anyway, it wouldn't have been a problem. And then again we get another lower high, remove the entry price for the potential buy and move down. And of course at any time around this area, because you can see that we've got support here, if you want to take the profits off the table, you can do. You don't have to wait for the market to take it out. The reason I've held the position here is that according to the implied volatility, we are due a big sell-off in this market, and that's why you can see how the market accelerated down at this point, because it keeps, it's teetering on a cliff, and as soon as it's allowed, and I say allowed to move lower, then we will see some decent trades to the downside. It's nice to actually hold these a bit longer term as well, not just in 5-minute charts. So if you can get in and you can hold it, that's what you want to do. So here the market's trading sideways, and then you'll see it actually come back as it hits the stop there. And just going back to the point of holding for the longer term, of course, what you would do is just keep the stop in the initial position to see what actually happens. But of course, yesterday, we go to the chart, you can see the market moved lower, came back, and then they drove the market back with the plunge protection team just to make sure that we're not actually going to go lower yet. So you can see at the moment they still don't want it to go lower, so collecting the profits is probably the best option on an intraday basis at the moment. I'd stopped trading, sent out a note, but we did have another signal at the end of the session there as well for another 20 points. On the implied volatility, we've got 1065. This didn't really increase much yesterday. In fact, I think it may have actually gone down. I can't remember what yesterday's figure, where they all seem to merge into the same one, unless it was 1037. That seems to ring a bell. Whatever, it hasn't increased much. We're still in that 10 area, just over 10.5. A lot more to come on the downside in the implied volatility. News-wise today, a bit different today, different routine. We've got the Federal Reserve meeting today, haven't we? If I recall, we got the big one today, and also crude oil inventories out at 3:30 p.m. and the FOMC statement out at 7 p.m. So the market could be fairly quiet. Yesterday broke the rules, of course. I did say yesterday morning that Tuesdays can be a difficult trading day, but it turned out to be better than forecast. But apparently there was a rumour that hit the market for the down move that Japan were actually going to start helicopter money on the 29th, and then it was retracted and quashed and glossed over, whatever. And again, the same things happened on the overnight market as well with the USD JPY. But at the moment, all denial going on about the latest round of QE from Japan. It could be Friday. 29th is the actual day when it was proposed and when Bernanke went out to Japan and agreed with Kuroda, but we'll have to wait and see. So the daily chart sideways, which you can see here. Volume kicked up a bit during yesterday's session, and again today fairly quiet because the market will be waiting for Yellen unless it does all of the move beforehand. Again, it's always a difficult one. Things change over the years. You could always say before that you would get a bit of a move before, market would be quiet, then you get the rest of the move, or you get the move beforehand and then you get nothing after. So that, there's two options there that could actually happen. Right, that's it for this morning. I will see you in tomorrow's, unless there's something to report during the day, then I'll let you know via email. Other than that, thanks for watching. See you in the next one.